Hello everyone and welcome back. In this video, I'm going to be going over the top 5 most popular dividend ETFs there are. And if you're a dividend investor, it's very likely that you do already own one of these ETFs. So I'm going to be going over a brief overview of each of these ETFs, talk about their dividend and how they select the stocks that they invest in. And if you do enjoy this video and appreciate content like this, definitely please give this video a like and subscribe for future content. So the way I selected these ETFs were by assets under management. So if we scroll down on this list, we are going to very quickly run into our first dividend ETF, and that ETF is the Vanguard Dividend Appreciation ETF. Now, the Vanguard Dividend Appreciation ETF has a selection method of tracking the S&P US Dividend Growers Index. And that is an index that consists of common stocks of companies that have a record of increasing their dividends over time. Now, it is a little bit more involved than that simply. If we go to the page for the U.S. Dividend Growers Index maintained by S&P, it's an index designed to measure the performance of U.S. companies that have followed a policy of consistently increasing their dividend every year for the last 10 consecutive years. This index then excludes the top 25 highest yielding eligible companies from the index. So this index specifically tracks companies that regularly increase their dividends, but on top of that, it excludes dividend stocks that pay a very high yield. So these are not going to typically be high yield dividend companies, although there are some companies in here that you'll see that do have pretty high yield, but the top 25% of the highest yielding eligible companies are not going to be included. So this is going to be focused really on those dividend growth companies that have modest yields on their own. If we look at the holdings of this ETF, you do see some great stocks here in the top 10. You get a wide diversity of pretty much every single industry, from technology via Microsoft and Apple to financials like JPMorgan, more technology in Broadcom, healthcare in United Health Group. You get some energy in Exxon and Mobil, and you also get some more healthcare in Johnson & Johnson. Then you get like payment intermediary companies / financial companies like MasterCard and Visa also. So what this top 10 list shows is that this ETF invests in some very high quality companies. Pretty much every single one of these companies you have likely have heard of in the past. And I think we can all agree that none of these companies are going to go anywhere anytime soon. Now, as a dividend ETF, the fund offers a relatively modest dividend yield at about 2.1%. Now, however, that is a bit higher than the S&P 500. I'm using VOO, the Vanguard ETF that tracks the S&P 500 for comparison. That offers a 1.57%. So, of course, as a dividend ETF, you are going to see that a bit higher than the general market. So looking at the past history of payments here, we do see that this fund pays every single quarter and it pays reliably. So if we also look at the cash amount, you're going to see that this dividend grows nicely over time. Every year, this ETF is paying out an appreciating dividend, again, because it focuses on companies that increase their dividends. So you will naturally see that the fund itself also increases its dividends. And when we look at dividend growth, we see that the fund has an average 5-year growth rate of 9.5%. So some pretty solid dividend growth there over time. So after VIG, the Vanguard Dividend Appreciation ETF, we're going to scroll down and quickly run into the second ETF on the list. And I'd even argue that among dividend investors, this ETF is probably even more popular, I would say, based on what I read online. The Schwab US Dividend Equity ETF, SCHD, everyone pretty much buys into that, and I don't really hear so much about VIG, but at the same time, when I think about it, VIG is my larger holding, so maybe people just like to speak about SCHD more, and they use VIG as a more silent holding. With SCHD, the intent is to track the total return of the Dow Jones US Dividend 100 Index. Now we go to the page for the US Dividend 100 index maintained by Dow Jones. And the index is designed to measure the performance of high-yielding dividend stocks in the U.S. with a record of consistently paying dividends, selected for fundamental strength relative to their peers based on financial ratios. So we see a similarity between VIG and SCHD. Both of those ETFs have a selection method of choosing stocks that have a record of consistently increasing dividends, but SCHD then selects these stocks further based on fundamental strengths by using financial ratios. So from those two selection method requirements, we do again see a solid list of stocks here in general. Of course, some people may argue some of these stocks aren't so great, like Verizon. A lot of people complained for a long time why this stock is in this fund, and I am just going to guess off the top of my head, this is probably for diversification purposes. Now, we do see that all of these stocks, again, are pretty well known in themselves, and this is a solid list. And this ETF here contrasts very well with VIG. If we look at the holdings for VIG, you pretty much see that there's no holding overlap. I think both of them do hold Broadcom, but other than that, there is no stock overlap. That's why a lot of people like myself like to hold these two ETFs together, because when you look at both of these holdings in total, there is very little overlap between VIG and SCHD. So they're both two great ETFs and they generally don't overlap their holdings. Now, with SCHD, we are going to see quite the bit higher of dividend yield. So it's currently paying 3.89% about, and similar to VIG, this also does pay quarterly. And if we look back historically here, you do see similar to VIG that this dividend does grow very well over time. And this ETF even grows its dividend over time higher than VIG. We see a 5-year growth rate on average of a little bit more than 13%. So not only does it offer a higher current yield, but it also offers better dividend growth than VIG. And maybe that's why some people speak about it more than VIG, why it seems a little bit more popular, because as a dividend investor, you are probably looking for both yield and growth, and this ETF offers both very well. So going further down on the list, we see closely behind SCHD, we see the Vanguard High Dividend Yield ETF. This ETF has a selection method of tracking the FTSE High Dividend Yield Index, which consists of common stocks of companies that pay dividends that are generally higher than average. So as the name of the ETF suggests, this is looking for high yield dividends. With this ETF, we are going to begin to see a bit of divergence from the previous two ETFs that selected stocks based on their growing dividends. So we're going to see some stocks here that are quite the same, and some of these stocks don't even really pay that high of dividends in themselves. But we will see, of course, stocks that do, like JPMorgan. I would say that pays a bit above average. ExxonMobil, Johnson & Johnson, Chevron. In all, a lot of these companies are going to pay in the 3% range, or at least the high 2s. This ETF is really beginning to get to investors that want a higher return in their dividend yield. Getting into the dividend, we see that it offers a current yield of 3.9%, which is pretty much right in line with SCHD. Again, this ETF is intending to pay high dividends, while SCHD doesn't really have that selection method, but SCHD falls right in line with VYM. And probably, again, that is why SCHD is more popular. When we get into the dividend growth, you'll see a bit more why. We do see, of course, some decent growth over time with VYM as well. So even though it is a high dividend yield ETF, you will see those dividends grow over time, which I think every single investor likes to see. Now, getting into the 5-year growth rate, as I said before, this ETF does grow its dividend, but it basically falls in comparison to both the Vanguard Dividend Appreciation ETF and SCHD, like I said before. This one only offers a little bit more than 5% average growth rate for the past 5 years. So, SCHD beats it both pretty much in yield, or it's right in line with it, and then it also beats it on that growth rate, which is why I feel that many investors do pick SCHD over VYM. I don't think that people really see that there's any benefit to holding this ETF versus SCHD. Next up on the list, which is what I am going to have to scroll down quite a bit for to get there, you are going to see the very popular JPMorgan Equity Premium Income ETF. Now, this ETF is a bit unconventional in its selection method and how it pays you. Firstly, this ETF doesn't really pay a true dividend. It is mostly an income ETF that you get through option premiums and stock dividends, but the majority of that income you receive will be from that option premium. So the way that this ETF constructs its portfolio is it selects low volatility stocks based on proprietary research designed to identify over and undervalued stock with attractive risk return characteristics, and the intent is to deliver a significant portion of the returns associated with the S&P 500 index with lower volatility in addition to a monthly income. And with this ETF, you are going to see quite a bit of different holdings. Some of these are the same, like a lot of the other ETFs had Microsoft in it, or MasterCard and Visa as well. But you do see things like Meta and Amazon, which really aren't associated with dividends because these companies, at least not prior, Meta does pay a dividend now, but they don't pay that high of dividends, so people wouldn't get that high of dividend returns. But with these stocks, they're basically able to use this option strategy through something called exchange-linked notes, which pay you more so of a coupon from that option income that you receive as premium. So very unconventional holdings you see here. A lot of these holdings you wouldn't even find in a typical ETF. Like Intuit is not in many of the ETFs that I see, at least not in the top 10. Personally, I don't even know what this company is. Train Technologies, and Progressive is an insurance company. I believe that that's what that is. But a lot of these companies, again, you will not typically see. And if you notice, this ETF does offer some solid diversification with its holdings. If you saw before, a lot of the other ETFs have a very high upper weighting, but this one actually weights a lot of their holdings very closely together. And unlike the previous 3 ETFs, I'm not going to get into the dividend growth of this ETF because it is not designed that way. You get most of the income through options premium, so I'm going to get into that in a moment. But the dividend yield is quite high at 6.42%. It is going to be the highest one on this list. Probably why a lot of dividend investors like it, because they get that high income. And this ETF does pay monthly. It is the only ETF on this list that pays monthly. Every single month around the first week, the dividend investors like myself are going to receive a nice dividend payment consistently. And if we get into the cash amount of these dividend payments, you do see some erratic differences here. So you're going to see quite big swings and a dividend that doesn't necessarily increase in a conventional sense. So the way that this ETF works again is through selling those options premiums. And basically when options price themselves, they go by something called volatility. So a measure of volatility, we can look at something called the VIX, which is the volatility index. And we basically see when market volatility is high. In other words, when there's a lot of up and downs, when there's a lot of fear, when the market is very choppy, we see this big jumps and whatnot. So if we focus on times when the market was choppy, like around, let's say, March of 2022, when that whole banking thing was going on, if I remember correctly, March and April, we're going to quickly look at that dividend payment and see what happened. So we see around March and April that dividend did jump quite significantly, of course, because the volatility in the market was increased. So again, this ETF is going to be more so of a volatility ETF. When market conditions are very choppy, when there is a lot of fear in the market, you are going to generally get paid quite a bit more than normal. So that is where that dividend growth comes from, unlike these other dividend ETFs on the list. And finally, let's scroll down for the last ETF on the list, and that is DGRO, the iShares Core Dividend Growth ETF. This is also a pretty popular ETF, although of course not as popular as the others. There is quite a bit of overlap with this ETF and VIG, which was the first one on the list. If we look at the investment objective of this ETF, it is pretty much right in line with VIG. The iShares Core Dividend Growth ETF seeks to track the investment results of an index comprised of U.S. equities with a history of consistently growing their dividends. So pretty much right in line with the intent of VIG. You will also see quite a few of the same similar holdings. Now, DGRO and VIG do weight their holdings a little bit differently, but there is pretty much entire overlap. A lot of these holdings are going to be in both of the ETFs at some point. Now, currently the dividend yield is a bit higher at 2.69%, and if we do scroll down, we do see that, like the other three ETFs on this list, aside from JEPI, this ETF also does pay quarterly. And we do see some decent dividend growth over time if we go back and look at that. And this fund does offer slightly better dividend growth than VIG, with a 5-year growth rate of a little bit more than 10%. So it does offer a bit more of a higher dividend yield and a slightly more higher dividend growth rate. But for some reason, investors favor VIG over DGRO. Now, again, both of these ETFs I think are pretty similar, so I don't think there is going to be too much of a difference over time if you choose one or the other. Now, speaking to the thumbnail of this video and what we own, what I do own is I own 3 of these ETFs. I do own VIG. I currently have about $36,000 worth of this ETF. And in my income portfolio, I do also own SCHD and JEPI. So again, I think that pretty much every single dividend investor probably does hold one of these ETFs, or at least 90% of us do. Let me know in the comments below if you do hold one of these ETFs. And again, if you did enjoy this content, leave this video a like and subscribe for future content, and I will see you all in the next video.